Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, April 9th, 2019. In this video, I want to take a quick look at the charts of the index futures. We'll look at ES, NQ, and RTY, and then I wanted to do just go over the top, 20 or so components of the Nasdaq 100. I won't spend a lot of time on each chart, but I just want to highlight some of the developments that I'm watching that stand out at this time. All right, start out here with the ES 60-minute chart. ES right here. If I don't mention it, the ticker symbols are usually up in the top upper left-hand corner of the chart. This is the S&P 500 E-mini futures. Still watching this level here, about 28.68. It's a decent support level. We tagged it the other day after breaking down below that wedge type pattern right there. Let's try to get it with this tool here. There's your uptrend line, breakdown back test, little kickback rally, and we've simply been extending these divergences that have been in place for a while now. So same old, call it Groundhog Day, if you will. Another day we're up, another day the divergences extend. But remember, it's not as if they don't play out. There is no guarantee they will, but more often than not they do. So we had a divergent high back here on the 60-minute chart, played out for a little correction. Continued to extend those divergences, finally played out for a much bigger correction when we broke this uptrend line, back tested, and then boom. So the entire move down, and that was one of the larger corrections in a while, was that. Small little price channel there with the divergent high, small little divergent high, broke down right there. I should clarify that's where the divergence lines were right there. Let's use this tool here. And then we pushed on up, made another, extended the divergence or made a larger divergent high, and we had a larger correction. So that's what we're looking at here. Yes, the markets are within shooting distance of the all-time highs, and I'll tell you, it's more often than not when you have a security or especially the indexes get up there, they usually at least test it and or usually pop it briefly. I'd say more often than not they pop above it, and I've already shared my thoughts because of the divergences, not just here on the 60-minute chart, but much more importantly on the daily time frame of SPY, QQQ, and the overbought conditions. I would put very high odds that any break above the new highs would be fleeting and relatively minor, and that means anywhere from within a day up to maybe 2 weeks of breaking out to new highs, and within, hard to say, but I'd say 3 percentage points maybe above the previous 2018 highs, you probably get a reversal. That would be my preferred scenario right now. So here's the thing. So we have divergences, we have these little minor trendline breaks, but we don't have any sell signals on the daily time frame yet, and I'm going to get to those. So something that we might watch. All right, let's look at NQ, Nasdaq 100 E-mini futures. Similar story here. We just continued to, we had those minor uptrend lines that were broken, back tested. We hit that first support level I had, 75.1950, and that's still the level it needs to go. So since then, we've just drifted slightly higher, mostly sideways for the last week or so. There's our sideways trading range. I have a minor support line right below it, around, there it is, 75.55. That level needs to go, and then more importantly 75.19. And just as with ES, we've simply extended the divergences that were already in place. So this is why I have very little, actually zero desire to try to game a potential breakout to new highs, even though the odds probably favor it at this point since we're so close. You're talking just a couple percentage points, and the risk for a sudden reversal, especially because we're heading into earnings season here, is just not worth it. Because if you're trying to swing trade it up, if you're trying to day trade it up, you're going to get chopped to pieces. If you're trying to swing trade it up, it's just not worth the overnight risk. In other words, why risk to make, 3% or so, if you can easily wake up to a gap 2% or more against your position. If you're using a 3-to-1 RR and you're targeting 3% upside to try to game a pop to new highs, again, assuming that you think we're just going to pop and reverse. If you think the market's going to pop to new highs and run and burn through the divergences and and head on a lot higher, by all means, there's a lot of, use these support levels that I give you as objective levels to place your stops below and buy those dips. But as of now, like I said, way too many red flags, the declining volume, deterioration in market breadth, divergences on not just the 60-minute chart, but the daily chart. So this is not only not the kind of market that I care to go long, but it is exactly the type of market that I'm looking to jump back in aggressively short when we get these sell signals that I'm about to cover here. All right, let's see. I want to also show you RTY. RTY is the futures contract for the Russell 2000 small cap index, and that one broke down a lot like the big large caps here. We had a nice clean trend line. There's your wedge type pattern. You had divergence on the PPO here, not on the RSI, but what you did have on the RSI was a nice overbought reading well above that the 70 level, which isn't shown here, but it would be about right here, well above that. And you can see now ideally you like to see extreme overbought followed by a lower overbought reading. In other words, here's a big comparable overbought level and right here. So you go back last couple months here to early February or so, and you can see we've had 3 comparable overbought readings. Now, it's not as if those other 2 didn't result in pullbacks. They certainly did. They were relatively small pullbacks right there and right there. And both times what happened is they pushed up and we made a divergent high right there. There's the RSI, a lower high, and that's certainly a possibility here, and that would also mesh with that false breakout to new, or failed breakout to new high scenario. So sorry, that divergent high should go to that point. And so that would be a nice scenario here on the RTY. Maybe we get a kickback rally here. Maybe we come in and back test at higher levels, make a new high, and then put in a divergent high. So there's one thing to look for, and you can see what happened the last time we had those 2 divergences there. That was that drop and that drop. Very profitable if you're trading the futures. So sometimes you get the divergence, sometimes you get that second lower high, and sometimes you don't. So right now we do have small caps on a sell signal, but the problem is, as I just showed you, the large caps aren't. And although they can disconnect from each other for times where large caps can go up and small caps are going down, or vice versa, for the most part you're only going to drop so much while the large caps are either holding up or moving higher. So in other words, while this chart in a vacuum would say, oh, okay, we broke 1575 today, great, that was what I was waiting for, next sell signal to take us down there. Well, not yet. Not so fast, because the large caps are hanging in there right now above support. So what you're seeing so far is RTY has snapped back just above, really pretty much right on that level now. I have it at 1575.50. Remember, there's no 43. These futures trade in quarter point increments, so that's 1575.50, and we're at 1576. So we're pretty much regaining that level now. Or maybe a back test. We'll see. Depends what the large caps do today. All right, let's roll into, this is what I wanted to spend most of the time of the video on. Let me grab my chart here. We're going to look at QQQ. And I'm going to go through these relatively quickly, but I'm going to highlight the key levels that I'm watching, and I want to make a few points about what I'm seeing in the charts. So we're going to go through the list of the component list here. It shows the 105 or so components of the Nasdaq 100. You have a couple that have double, 2 different ticker symbols, like Alphabet, the Class A shares, and the other class. 105 total securities in there. So this is the Nasdaq 100. We're not going to go through all 100. There they all are there. We'll go through maybe the top dozen or so. And the reason is, well, 2 reasons. I want to show you kind of how those top components look, and remember, the market or a sector or an index is simply the sum of its parts, and in this case, because these parts are so top heavy, the weightings you can see in the market cap, and remember, it's a market cap weighted index on the Nasdaq 100, and you can see just how much of an impact these 2 big names, Apple and Microsoft, right here. This is their market cap. They're nearly $1 trillion companies. Now you go down to just below the top 10 here, and you're talking companies that are only about 100 billion. Yeah, it's still a big company, don't get me wrong, $100 billion company, but it would take 10 times the move in Nvidia or Costco or Texas Instruments or Starbucks to offset a move in just Apple or Microsoft. So therefore, keep that in mind as I'm going down these charts, that we go down the line, the less significance they have on the index, but they're still the top weighted components. You go all the way to the bottom, yeah, we're not going to do that now because you're talking, HSIC or TTOW, they're $10 billion companies. So they can go to, they can go up or down 20-30%. It's not going to have a big impact on the market. So, all right, let's go ahead and dive into the charts, and we'll try to wrap this one up. QQQ, if anything stands out to me right now, it is two things. It's this trend line right here. I have an uptrend line off the lows and from December 24th. Not super well defined, but enough reactions right now, and more so I like the trend line because it aligns with the uptrend lines I'm seeing in a lot of the top components of QQQ. This is a very steep, and in my word, steep equals dangerous when we're talking about wedges. I should say it's a very steep rising wedge pattern or steep uptrend line, and usually the steeper the trend line, the sharper the fall once it breaks. That's usually, no guarantees, but that's often the case. So there it is. If I'm watching one level on QQQ right now, it's that. More concerned about that level than really the highs. To me, the highs are insignificant. Whether we pop them, whether we test them perfectly reverse, to me, this is my best case scenario right now. Most bullish scenario is a brief pop to new highs, maybe 3% or so above, followed by a reversal. Anywhere from a day, the day it happens, the day after, up to maybe about 2 weeks. Probably not any more than that. And if the charts change, I might change my tune or my outlook on the market. But right now, we have these divergences all the way from the 60-minute charts that I just showed you out to the daily charts. The last time that we had negative divergence on the daily time frame on QQQ was right here. You see what happened then, biggest correction in years, and right here. So there we had a virtual double top, so the first divergence didn't play out. And again, these divergences, you had little divergences along the way, played out for little corrections till the big one came, and the real selling started is when the uptrend line broke there. So that's what I'm watching, and let's go ahead and look at the individual components here, starting with Big Apple. Now, I'll tell you, this stock, of all the charts I'm going to go through, probably is one of the better looking charts. We do have some potential. I have to emphasize the word potential negative divergence on the RSI. Why? Because, well, the RSI is still pointing higher. Number one, momentum is up. This is a momentum indicator here, the PPO, which is pointing higher. There's small divergence. I should have highlighted it there for you. Apple would have to reverse soon to keep these divergences intact. Right here, let's get rid of that. Let me give you a little line. That might show better on the 60-minute chart, small high. But here's the thing, Apple just broke out today. I had resistance at 197.70. So as long as it holds above that level, that's bullish. You've got to give it credit. It broke out yesterday, actually, and it's following through today. Now, here's that trend line. Again, this will be a common theme of this video. There's look how well defined it is in Apple. Whereas QQQ, we only had a few reactions. On Apple, we have quite a few. We had one brief false breakdown here on Apple and some of these other stocks. Whipsaw signal, we snapped right back up the following day. In fact, we almost closed, as a green candle means we closed almost right back on that trend line. So this is the trend line that needs to go. I have alerts set on a lot of these, and I suspect that if and when this one goes, I'll have a lot going off in close proximity, either that same day or within a day or so around it. But as far as Apple right now, near term, momentum is up. People are all excited about those new all-time highs. Stocks usually, when they get that close, they usually make a run for it, but that is not guaranteed by any means. What I've highlighted here is a thin zone. I don't know if you can make it out on the video. Here, I'll do this for you. Volume at price, turn that up, make it a little brighter, and you'll see these are the volume price histogram bars. Thin zones on there act a lot like a gap. Once entered, they're usually backfilled. So there's your thin zone here. Apple's already in that thin zone now. So there's not a lot stopping it. We had a gap there. That's why I had resistance at 197.70. But if the market wants to pop to new highs and continue to go, Apple can do so. It might come in, probably revisit that trend line again, but the next resistance is up here all the way around 216.50 or so, and that's also around the top of that thin zone there. So like I said, of all the stocks out there, right now I can't make a bearish case on Apple, but that could change tomorrow. If something happened and this stock fell back below 197.70, false breakout. More importantly, if it made an impulsive break and or daily close above that trend line, even more bearish. And the divergences would be confirmed, and the stock would be coming back in my opinion, and so would the market. All right, let me get rid of this so that's not distracting. I like to turn down a lot of things on the chart so it just doesn't take away from price. All right, next one up, Microsoft. Again, common theme. Forget about everything else you're seeing here. Look at these trend lines, and that's what I'm looking at right now, focused on. There's that one little false break, close back on the trend line really, and we're sitting on right now negative divergence. Microsoft is on that trend line today. It hasn't broken it yet. Like I like to say, support is support until unless broken. And divergences can certainly be extended. This is a more important trend line. I'm not going to use the word immutable because it can be moved and changed and adjusted. Let's say you get another reaction here, then maybe that reaction is more significant down there and you reverse. But as of now, there's a lot of tags here, and it aligns with many of those other trend lines on the big FANG stocks. And so, but this line is certainly flexible here, your divergence line. So if Microsoft finds support here and bounces, well, we extend our divergence lines, and maybe they get taken out, but as long as they're still intact, with, in other words, making lower highs versus those previous highs right there, then you have the negative divergence. So it could look like that. So this one could break down today. It could break down in a week from now or a month from now, or sooner or later it'll probably take out that trend line, but who knows? Anything's possible. Amazon, same thing, uptrend line to watch, coming up on resistance here around 1875.50. But still above trend. That's the important thing. Divergence on the RSI, but not so much on the PPO. But again, I'd focus more on this trend line here. GOOGL, Alphabet Class A. I have two alternative trend lines. Let's tighten this one up a little bit, clean it up here. I have this one off the lows right there, which we're testing now, and this yellow BOD, or benefit of the doubt trend line. More reactions, so I'd watch this trend line here. On Alphabet. And there's the other share class. This is a little cleaner. You can see the trend line off the lows right here. Just moved it a little bit, but that's the trend line off the lows. And then this one, which has more reactions. So this is the one I'm watching right now. Let's tighten that up to catch these candles. A lot of these candles here. So there it is. Lots of reactions. Watch that trend line. I think I already have an alert set, but if not, just to make sure, there it is. And Facebook, same thing, uptrend line, this yellow uptrend line, and the BOD, or benefit of the doubt trend line. Benefit of the doubt because it's the last of the two to break. When I have two trend lines in close proximity, or two support levels, could be price support as well, I'll give it the benefit of the doubt to the latter of the two, especially when the uptrend is strong like this. You don't want to jump the gun. God knows I've done enough of that lately with the official short trades, so it's been a resilient trend. I don't regret those trades in hindsight. I mean, hindsight I do, but they were clear sell signals on the 60-minute charts, divergences on the daily. What we've seen now is really, I don't want to use the word unprecedented, but quite unusual, especially with the amount of outflows we have on domestic funds, a lot of economic indicators rolling over and everything else like that. But again, price is most important here. So as long as the trend is up, which it is right now, make no mistakes, clearly bullish. We don't have any sell signals, nor do we have any index shorts right now, or anything even closely related to the indexes right now as official trade ideas. But there's the lines you can see. So Facebook has clear negative divergence right now, but as you can see, I can move this divergence line if it wants to continue to rally. it can do so for some time, and certainly with the market taking out new highs, and then have these divergences play out later. So where would a sell signal come? Like everything else, either on a break of these trend lines, the BOD trend line. Break below 174 would be a red flag for Facebook, because that was support. But a solid break there, and maybe it comes on a bearish reversal candlestick pattern, something along those lines. There's a lot of possibilities. Intel, there's a yellow uptrend line right here to watch. There it is, off the lows back here. It's a minor uptrend line. I'm not putting a lot of weighting on it. And then this other trend line here from the lows on December 24th. That's the BOD trend line there. If Intel comes back in, and I think it will, and here's a common theme, a lot of these stocks have clean negative divergences forming, and so I think a correction's coming very soon, and that correction, the next one on Intel, will take it at least back to that white BOD trend line. Maybe we continue to wedge higher from there, or maybe we break down and that first target would be about 50.68 or so. Cisco, just a clean, crisp wedge, no false breaks or anything like that below, negative divergence, everything you like to see. This one comes down when that breaks, and let me say this, probably not going to do this right away without the market cooperating. In other words, the broad market, let's say Cisco breaks down soon, and the broad market continues to new highs, then you might backtest here. And then eventually roll down here to about $49. That's my target right now on Cisco. We do not have a sell signal. Again, this is just a what I call a short setup. That's about an 11% drop from where we're at now, but we could wedge higher. A lot can happen. But if you see the market break down, QQQ breaks that support, that uptrend line, a lot of the other top components, I would put very high odds that this one comes down pretty quickly with very little kickback rallies and comes down to that $49 level. And again, that's a pretty nice swing trade if it gets there, about 11%. And again, if everything's priced in the charts, that we're going to have a breakdown soon. But you're swimming against the tide if this one does break down and the broad markets continue higher. Also, again, very important, let me just digress for 1 second. We are now heading into the thicker earnings season. It is imperative that you check your existing trades, or and probably even more importantly, any new trades you're considering. Let's take Cisco for example. If you were to short Cisco on a break of this uptrend line and then they report next week, then that can change everything. So know the companies that you're either currently in or planning to take, and as a rule, not a hard rule, but generally I don't like to take breakouts or whether they're long side or short side breakouts that occur within 2 weeks before earnings, because stocks tend to go into a holding pattern before earnings, a lot like the Fed. The stock market goes into a holding pattern before a big FOMC meeting, just kind of waiting. Everybody's waiting to hear what happens. So number one, the breakdown's likely to prove to be either a false breakdown or you're in a dead money trade. Then time clicks by, 2 weeks later or so, a week later, the company reports earnings. Very, very important that you're familiar with the stocks you're trading. If you're not already familiar with it, pull a chart, go back not just a few months, go back a couple years at least, and look at every 3 months right around at the time they reported earnings, and get to know the history of that stock. Some stocks have a history of managing earnings expectations extremely well, so there's very few surprises, so therefore after they report there's not a big gap in either direction, whereas others, I'm going to get to Netflix here, an example, is notorious for big gaps either way. You hold Netflix into earnings, you are rolling the dice, and you are almost certainly going to wake up to a gap down or up or down for or against your position. So that's the bottom line. You need to know your stocks. Some have a much higher chance of a big gap, and therefore you're going to have to manage that accordingly. Either close out your trade, hedge up, or just be aware of the risks that you're taking. This is the new support center. Just click on the resources link at the menu. You'll come into the support center. You'll notice if you're logged in, you'll see account settings here. If you're logged out, you're going to see different things. But right here, tools of the trade, there it is. Click on earnings calendar. It will take you to earningswhisper.com. At the very top here, let me move that down for you, and you can see, if you're not familiar with Earnings Whisper, right here, just enter the ticker. So what were we just looking at? Cisco, right? Cisco CS, if I could type CSCO, enter, and it tells me Cisco reports on May 15th. So we've got about 6 weeks or so before that one reports. You need to know that, and you know, take into consideration if that pattern broke down today. Well, again, you'd want to probably see NQ break that support level I'm talking about. Right now, the drift is up. Everybody's looking at those new highs. Odds are going to favor that we pop those new highs, whether it happens or not. That's just what I think is probably, you know, better than 50% chance we do, or at least test those highs. So therefore, you know, a short on a breakdown in that Cisco trade might prove frustrating if you were to do it today, let's say. Okay, next one up. Again, we're not going to go through them all. Just a common theme that I'm seeing here, you know, as all these uptrend lines are just so similar. They're all in such close proximity. So again, while the trend is up, no sell signals, it would only take one bad day on just about all of these stocks. One bad day, that means, you know, here's a bad day. There's a big red candle. One bad day could trigger breakdowns on most of those. And because this has been a lopsided, one-sided trade, very crowded trade, especially more concentration going into those these market leading stocks that I'm covering, it could happen very fast. So you know, although we don't have any sell signals yet, you want to have your ducks in a row. If you're just a day or two late sometimes on these big moves, you miss out. So like, for example, if you were looking to short Comcast back here, being a day or two late and you short, you're now in no man's land. You're between support and resistance. You don't have an objective entry anymore, because if you short it right here, let's just say, for example, and I'm just picking on Comcast or using this one right now, let's say it breaks down and then right here you decide to short a couple days later. Well, you're in no man's land. Here's your first support. I have to update this chart, guys. That's not a solid support level, so don't pay too much attention to that one right now. But let's just say that was. Then the odds of a kickback rally at least halfway through the move are pretty good. So you don't want to short there and then either get stopped out right away or immediately be underwater. You want to short the breakdown or short the back test. And you certainly don't want to short as you're coming up on the first price target level, because there's going to be a reaction likely. That might be an old earnings state for that one, so ignore that. I haven't checked them all yet. PEP, Pepsi, there's your trend line. Big triple top. We have some divergence as well, potential divergence. So you can look at this one glass half empty or glass half full, however you want. Looks like potential flagging type action right here, bull flagging. You have this consolidation, takes the form of a bull flag. You also have an impulsive move up. So should the market break to new highs and just keep running for a little while, well, this would be your measured target on Pepsi. It's off here. I got to pull this all the way down. That's the measured target of the flag pattern, about to 130 or so. However, what you're looking at also is potential triple top failure here if the stock reverses soon. 1, 2, 3. It already failed that pop above 122 once. You can see that, and it's moved back in. So glass half full, glass half empty would have us failing there, and there was this divergence playing out, the negative divergence, and Pepsi coming back in. Also, this is just me. You guys do what you want, but I have a general rule that I don't chase breakouts on to new all-time highs or breakouts to new highs when something is extremely overbought. Overbought and divergence equals a much higher failure rate. I'm just circling the overbought readings here, and you can then see what happens. So you want to take a long breakout when a stock is overbought. Just go back and see what the stock did over time when it was overbought. And again, trading can be tough enough. Why stack the odds against your favor? And that's what you're doing when you take long side breakouts. This is overbought. it took too much fuel and energy expended just to get up to this 122 level. The odds it's going to break out and keep running with this kind of, it's certainly possible, but the odds are against it. So the best case scenario for Pepsi would be come back in, consolidate under 122, and then finally go on to break out after clearing out these overbought conditions. Disney, can't knock this one. It looks like it's running up to new highs. There's no divergence on the RSI, potential divergence, but look at PPO's pointing up. So that one's pretty strong. I don't see a reason to get in front of that one, short it, nor would I chase it after such a rip. So I just leave that one alone. Netflix, we went I think 3 for 3 last year on official trades, and they were all short trades. We might have had a long. I know I was long personally. I mentioned after. So what we did is right here we had, this was a big earnings smackdown, big move down. There was a previous close right here on that, just below that uptrend line. Then we went that low intraday, and I waited patiently till we bounced back to that resistance level, which was former support right here, and added this one as an official short trade there. We covered it somewhere in here, and I even remember that one or this one. I think it was this one, reversing going long. Might have been that one too. And then it's set up in this rising wedge pattern, and we got a second opportunity to short it once again right at the same level. So this is a magic number. It's 380, 381. So you can see plain and simply in that one, here's the targets. We went all the way down. We milked almost all of that move down to about T3 here. And then of course at the time I mentioned it was bullish. That might have been also when I went long. Personally, I didn't put it on the site as a long, but there was big, strong divergences on the low right there, positive divergence, and a beautiful gap backfill. Again, in hindsight, that should have been a long right there. There was a gap, big gap, move down, divergent low, everything I like to see. And that it's played out. That's the point. This one's come full circle. The divergences seem to have played out. And just look at this wash, rinse, repeat scenario. Every single time without fail that this stock so far since that point in mid 2018 has bounced back to 380, 381. Shorts have been rewarded. Now that doesn't mean it'll last forever. This one could certainly break out, and because it's a well-defined level now with a lot of eyes on it, a break above that level would be bullish. So we've got to be careful here. But again, so you don't get married to it. The divergences tell me that that level will likely end up failing, or we'll get a likely trend reversal soon. And you know, if you want to short it on a pushback, if I don't add it before then, you want to short on a pushback to around 380, 380 up to 385 or so, you do so with a stop not too far above. So if they pop it and they continue to run, give it a little room. They might want to try to pop it just because so many eyes are watching it. Or your other next sell signal may come on a break above this uptrend line. So you see this pattern here. We're wedging up. There's your pattern right there. And this one has potentially, I think, a lot of downside when I look at the weekly chart and some other things on Netflix. So there it is, potential setup. But there's the trend line I'm watching. It's a little different from the other FANG stocks that I had those uptrend lines off the lows on the 24th. But I just wanted to talk on that one because I am looking for the next trading op in it. Adobe, ADBE. Clean little bearish rising wedge pattern, confirmed with divergence. PPO starting to roll over right here. You can see poised to make a bearish crossover. Couldn't look any better. The only thing you'd need here are two things: the market to roll over, number one, because again, a breakdown in Adobe, you'll be swimming against the tide if the broad market breaks. You know, QQQ goes to new highs and continues on. And the other thing, of course, we don't have any sell signals. You know, the best looking bullish or bearish chart pattern is only a trade setup. There's a huge difference between a trade setup and an active trade or an objective entry or anything like that. This is just a potential setup. Potential because these divergences can continue to build. Might have to move this line up. This one, like the market, may want to pop up and take out the new highs before reversing. So your sell signal comes on either a break below this trend line, ideally impulsively, ideally with confirmation the Qs have broken down, or SPY is also broken down. Right now we could be looking at, depending on how it happens here, a potential double top here around that 277-ish level, or also a potential, you know, brief false breakout to new highs. So you watch that. If it does break out above that 277-ish level and we come back in, you want to see it fall back below there impulsively as well as this trend line, and that would be your short entry on that one. And I think it would come all the way down at least to that 235-ish, 234-ish level, and quite possibly more. That's Adobe, PayPal, same story. And again, this is just a common theme and why I wanted to go through a handful of these stocks. It's these uptrend lines. The trend is strong, the trend is up, but we're precariously close. One bad day could pull a lot of these stocks below there, and we could get a rush for the exits. But until then, let's just watch these, and we'll go from there. Amgen, messy chart. I don't see a lot. This is just chopping around sideways. AVGO, divergence as it moves higher. Not one of my favorite, but it's getting a little stretched, and I don't like that divergent high. NVIDIA, breakout of this bullish falling wedge pattern right here. Trend indicator is bullish, but it just backfilled a pretty big gap there. So this one's at resistance. I think the bulk of the run is over at this point in time. There was a big gap backfill that's been made. If it can power up and the market can continue up, next target might be up here. That looked like a short target from back here, I guess. You had a bear flag breakdown there. T1, I might have moved. Yeah, that would have been a first target, second target on a short trade. So now we're just doing that in reverse. TXN breakout, but we're really more importantly on Texas Instruments would be, you know, we're coming up. This stock has just been failing around this 117-ish level, going back to the beginning of 2018. So we'll see if it can take that out or if it fails that level. COST, Costco, coming up, testing its old highs. A lot of stocks are doing that because that's what the market's doing. So there it is. I don't have a strong read on here. I see small divergences forming. And you know, this one goes the way of the market, I think. Whether it's a brief pop above, like a most bullish scenario, being as overbought as a lot of stocks are. If we pop above, come in for a back test. If you're bullish and looking for the market to go to you know, a lot higher in 2019, maybe look to position on a back test. If you're bearish, like I showed you, I gave you those lines. Wait for a sell signal, short, and just, you know, set your stops appropriately and hold on, because it could be you know, that could prove to be a golden shorting up on a lot of these stocks in the market. Only time will tell. A few more and we'll wrap it up here. Starbucks, I like this one for a short trade, and again, that's a common theme. A lot of these same thing, divergent highs, pretty clean uptrend line. So what I see here is a primary and a secondary uptrend line on Starbucks. Here's your primary uptrend line right here, pretty well defined, comes off lows back in June of 2018. Here's your big old divergences. It's been building here, negative divergence. And then you have a minor uptrend line because we're so high up away from this trend line that I think at minimum, when this one breaks, you come back in and you have a swing trade down to have another test, because I don't think we'd go straight through there. It's possible, but I think we would come in more like this, come down to that primary trend line, since we haven't visited it in quite a while, since back here, and then have a reaction and then go on to break down. And it's, you know, the divergences below that tell me it ultimately will. So what is that from here? If we don't have a sell signal yet, but if it broke down soon here, and I'll just have to say, let's say it breaks down around this level, and I'm going to come forward in time because that trend line comes in higher and higher. Stocks fall faster than they rise, so I think we could drop, it's about a 5 to 6%, we'll call it, yeah, about 5 to 6% drop to there. But then you know, ultimately I think this stock comes back down to any or all of these levels here, and that's Starbucks. Alright, I'm going to have to wrap this. There's just so many stocks. I'd love to go through them all. I'm looking how long this video is running, so I'm going to stop it after 2 or 3. I'm going to try to give you a couple bullish setups, just in case all these divergences and bearish patterns don't pan out. But here's one, Mondelez. I posted this in the trading room today. Nice, clean, negative divergence. Breakdown yesterday. Follow through today, but you can see it's below the wedge, but not going down. But why? Because the market's not going down. And until it does, you're probably not going to see a lot of these short setups pan out. But there it is. You also have to check it for earnings. A couple more that I might highlight here before we wrap this up. Just moving down the line. There's a trend line on Qualcomm to watch, but that one's been bullish lately. ADP, beautiful little setup. Earnings on May 1st before the market opens. You need a break of the wedge to trigger a sell signal. There's some potential targets. I might have to fine tune those into it. This one's already broken down. It's the maker of TurboTax, Quicken, I think. All that kind of good stuff. 2 red candles following the breakdown. Targets right here. I might have to fine-tune these targets, but we're coming up on earnings next. Well, we've got some time, May 23rd, after the market closes. Celgene, I'm not going to go there. ISRG, wedge type pattern at resistance, potential double top. Baidu looks probably as good as any right now. We had a divergent high there. Downtrend line, divergent low right here, and we've recently broke out of this basing pattern here. So right there. So Baidu, if you're looking to go long this stock, and I know it's a Chinese stock, but it trades in the QQQ, so it's probably it would come under selling pressure if the Qs came under heavy selling pressure. But it's in no man's land right here, smack between support and resistance. So the only objective entry at this point, in my opinion, is a pullback to support 176 or so, maybe for a swing up to 197 or so. Yeah, that's it. And there was one more. Yeah, this one, but I don't want to force it. WBA. I'm just trying to find some of these top components that look maybe potentially bullish. And this one could be bottoming. WBA, Walgreens Boots Alliance. The last time we had a big divergent low was right here. Huge rally from there. And the stock has corrected, clinging on by the skin of its teeth to potential divergence, but this one would need to reverse soon, and if so, probably come all the way back up here to about 62, and quite a bit more. Again, market willing. The market would have to continue to rally into, probably year end to see this one reverse and have these divergences really play out for a big move, but I thought I'd point it out. Okay, we'll wrap it up here. One of the longest videos I've ever made, but again, a lot of stuff covered. And if nothing else, the takeaway is just watch those trend lines on the market-leading stocks. And if they break, then and it's impulsive, we could have a waterfall sell-off, so you might need to move fast. And I'll do my best to update it if and when I see those breakdowns occur. Until then, trend has been up, and we'll just watch this and do this every day until we get some type of new technically significant development in the market. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.